It started quietly on Monday morning. By the closing bell, it was anything but quiet. Rigetti Computing up 25%, D-Wave Quantum 23% higher, IONQ up 16%, Arqit Quantum 20% gains, and even the lesser-known Quantum Computing Inc. up 12%. What caused this sudden surge? JPMorgan Chase. The world's largest bank just announced it will invest $10 billion into 27 strategic industries with quantum computing front and center. This isn't a meme stock pump or speculative frenzy. This is institutional money moving. And when big banks like JPMorgan shift focus, markets listen. The power play, $1.1 trillion for security and tech. JPMorgan's plan is part of a larger $1.1 trillion decade-long Security and Resiliency Initiative. The idea is to strengthen America's backbone in areas that matter most, from defense and aerospace to energy technology, advanced manufacturing, and the crown jewel, frontier technologies like quantum computing. Here's how Jamie Dimon framed it. It has become painfully clear that the United States has allowed itself to become too reliant on unreliable sources of critical minerals, products, and manufacturing, all of which are essential for our national security. Translation? JPMorgan doesn't just see quantum computing as a science experiment anymore. It's now a strategic asset, as critical as oil, semiconductors, or defense infrastructure. Quantum computing, the next frontier. If AI was about learning patterns, quantum computing is about breaking them. Unlike classical computers that use bits, ones and zeros, quantum machines use qubits, allowing them to perform calculations at speeds millions of times faster than today's supercomputers. That means in the future they could crack encryption codes that safeguard global finance, simulate molecules to design new drugs, optimize logistics for global supply chains, and even accelerate AI model training itself. That's why tech giants like Google, Microsoft, and Amazon are already neck deep in quantum research. Microsoft recently introduced its first quantum chip, codenamed Margarana 1. Google followed up with its Willow processor, a breakthrough in quantum stability. Amazon Web Services has integrated both Rigetti and IONQ quantum systems into its Amazon Bracket platform, allowing developers and researchers to access real quantum computers through the cloud. These aren't distant dreams anymore. They're test driving the future right now. Wall Street's quantum awakening. So why is this rally happening now? Because for the first time, Wall Street is treating quantum like it treated AI 2 years ago. The same pattern is unfolding. Quiet academic progress followed by sudden institutional validation. 2 years ago, AI was the buzzword. NVIDIA became the market's golden child. Now investors are hunting for the next NVIDIA, and quantum computing might just be it. Over the past month alone, Rigetti is up 175% and D-Wave has soared 130%. These are the kind of early-stage surges we saw in AI stocks when ChatGPT first made headlines. But there's a key difference. Quantum computing is still in its pre-commercial phase. There's no dominant platform, no standardized architecture yet. That's both the risk and the opportunity. So why does JPMorgan's move matter? When a retail investor buys a quantum stock, it's speculation. When JPMorgan commits $10 billion, it's strategy. This isn't a single bet. It's part of a systemic capital reallocation towards what the bank calls strategic technologies critical to U.S. economic resilience. That phrase, economic resilience, keeps popping up in JPMorgan's documentation, and it signals something bigger, a shift from chasing pure profit to ensuring technological independence. Quantum computing fits perfectly into that agenda because it underpins cybersecurity and encryption, AI model acceleration, defense simulations, and next-gen materials and energy modeling. Simply put, the U.S. wants to own the algorithms that will define the next century. From AI to quantum, the market rotation. If 2023-2024 was the AI rush, 2025-2026 could very well be the quantum run. Just look at the trend. AI startups are consolidating or being acquired by tech giants. GPU demand remains sky high, but valuations are stretched. Meanwhile, quantum companies are still valued like niche tech plays, despite being part of the same long-term ecosystem. The big advantage for investors right now is timing. Quantum computing isn't profitable yet, but that's exactly when long-term investors build positions. Think of where NVIDIA, AMD, or ASML were 10 years ago, building tech that few understood but everyone depends on today. Quantum computing could follow a similar trajectory. The risk and reward equation. Of course, this isn't a one-way street to profit. Quantum stocks are volatile, speculative, and heavily dependent on funding. A bad quarter, a missed milestone, or regulatory hurdles can cause 30+% swings overnight. That's why institutional involvement like JPMorgan's matters so much. It adds credibility, capital stability, and long-term commitment to an otherwise unstable sector. For retail investors, it's not about going all in. It's about understanding where the smart money is flowing and positioning yourself early with risk-managed exposure. The PyUncut Market Breakdown. If AI was the story of thinking faster, quantum is the story of thinking beyond limits. And JPMorgan just gave the world a $10 billion signal that the next wave of computing and investing is here. So whether you're an investor tracking small-cap quantum names like Rigetti and D-Wave, or watching how big tech integrates quantum into their AI pipelines, remember, institutional conviction often marks the beginning, not the end, of a revolution. Because when Wall Street leads quantum physics, we're no longer just talking about markets. We're talking about rewriting the math behind them. This has been PyUncut Market Breakdown, your deep dive into the intersection of money, machines, and momentum. If you enjoyed this analysis, don't forget to subscribe to PyUncut on YouTube and Spotify for more market stories that connect the dots between technology, investing, and the future of finance.